What is going on YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So Friday was crazy. If you checked out my community section, there was a huge fire that happened in my apartment complex, not in my building, but it was pretty crazy. So that threw things off. So a lot of you guys requested Prospect Capital and had me do a review on these guys. This is a high yield monthly dividend stock. Many people like it. Many people don't like it. So I'm going to go over the pros and cons, and I'm going to provide my rationales as to why I like or don't like it in the long run. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check this stock out right now. So Prospect Capital is a monthly dividend business development company sitting at $7.67. So in the past 5 years against the S&P, it has not done very well. So a lot of people loved buying these guys when the pandemic hit, when it was $4.55, and they loaded up on these guys. It's a high yield dividend stock sitting at 9.40%, a PE ratio of 82.87, which is high. Average volume 1.28 million. Market cap is 3.06 billion US dollars. G range is 609 to 863. Its day range is 758 to 770, and its previous close was 763. So I'm going to go over a few things with you guys. First, since inception, at their peak they were 1789 in 2007, and then you see the recession hit. These guys have not really rebounded over time. They've actually decreased in price per share over time. That's a red flag. So I just want to address that with you guys. Always study the price per share from the get-go, since inception to its current time. So that's one thing that I can show you guys real quick with these guys. Anytime a stock does something like that, that should raise big time red flags. So let's review these guys real quick. The Prospect Capital Corporation is a leading publicly traded business development company. We make debt and equity investments in the U.S. middle market businesses across a range of industries and seek to deliver steady, attractive returns to shareholders. We trade on the NASDAQ under the symbol PSEC. So they have 400 plus investments funded, 3.9 billion dividends declared, and 7.9 billion in assets. Remember, with these guys and business development companies, 90% of what they make have to go back to investors. That's the rule of a business development company and a real estate investment trust. You can even look it up just for proof, and you can correct me if I'm wrong, but that's usually how things go. So let's check these guys out in depth. So here's their portfolio. So there's an origination strategy, middle market lending buyout, real estate, and other. So the industries that they target are aerospace and defense, air freight and logistics, auto components, building products, capital markets, commercial services and supplies, communications equipment, construction, engineering, consumer finance, distributors, diversified consumer services, diversified financial services, diversified telecommunication services, electrical equipment, energy equipment and services, equity real estate investment trust, REITs, food and staples, retailing, food products, health equipment and supplies, healthcare providers and services, healthcare technology, hotels, restaurants and leisure. There's a lot of stuff. Household durables, IT services, interactive media services, internet and direct marketing, retail, leisure products, machinery, media, personal products, pharmaceuticals, professional services, software, textiles, apparel and luxury goods, and trading companies and distributors. So they do a lot with these guys, and they have a huge portfolio. But the one thing with their portfolio, okay, with their origination strategies, are basically we need to see how much revenue they're generating. You can have a huge portfolio, but you need to see what's inside of it, because look, its price per share decreased, and it's a high yield dividend stock. So there needs to be more digging with a monthly dividend stock like these, specifically a business development company. There's always a risk of a dividend cut or a problem with them when they completely suspend their dividend. This has happened before. I'm pretty sure in Capitella Finance this happened. CPTA is a symbol. So let's check out their revenue and dividend history. So look at their revenue. This is in millions US dollars. 791, 2016, 2017, 701, 2018, 657, 2019, 703, 2020, 623, can blame the pandemic, 2021, 631, and 2022, 710. So from 2016 to 2022, there's actually an overall decrease with these guys. That should raise a concern because they haven't beaten 2016's revenue, and it's 2022. So that's one thing that's a concern. Now we're going to check their dividend history. I'm going to start in 2014, and I'm going to go even further. So 2014, it was 11 cents. 2015, it was 8 cents. This is a monthly dividend, business development company. So 2015, it was 8 cents. And then 2017, it jumped to 6 cents. So there's already a decrease in the dividend from 2014 to 2017. That's a huge jump from 11 cents to 6 cents. And it's been stagnant at 6 cents, which is a problem. It just is stuck. So it's kind of like your employer. If you ain't going to get a raise, you're just stuck. Or if you're in a relationship, or if you're, in a unhealthy marriage and you're just stuck, how would you feel being 6 cents? The value of this person was so great in the beginning, and then they just turn out into being a goofball. Or your employer seemed to be great, new management came in, you're stuck. You're not going anywhere. They don't want to give you a raise. The person you're with, okay, say like you're in a relationship or dating or marriage, it's just stagnant. There's no growth. How would you feel? It doesn't feel good just to make the same consistent amount. So the payout ratio is 76%, but I'm going to go further with this dividend yield of 9.40%. So if you bought one share, you made 72 cents. You're just stagnant. That's a great feeling, isn't it? But let's go even further. Now I'm on NASDAQ.com, and it really didn't go anywhere. Still at 11 cents. So it started at 11, never reached 12 cents, and it decreased over time. So I wanted to even go further to show you guys. So it's a decrease in price per share and decrease in dividend. Revenue that's stagnant. Sounds like a miserable job. Like I did a compare and contrast. Or a miserable relationship or marriage. There's no growth. There's a decline. So that doesn't feel good. I'm going to show you a better alternative real quick for a dividend stock that's a business development company that has done very well and has hiked its dividend, and I own them. So I'm going to show you a better example. Of course, this is not financial advice, for entertainment purposes only. Disclaimer in the description. And I own Main Street Capital for a reason. I'm going to do a quick review on these guys. They're sitting at 40.28. They're a monthly dividend business development company. A dividend yield of 6.70%. A PE ratio of 12.62. Average volume 300.37K. The market cap is $3.11 billion US dollars. GA range is 31.66 to 45.67. Its day range is 39.72 to 40.42. And its previous close is 39.67. So what do I like better about them? Let's go over revenue and dividend history. Oh yeah, this looks good. Look at this revenue for a business development company. 2015 millions US dollars, 164. 2016 178. 2017 205, 2018, 233, 2019, 243, 2022, 222, you can blame the pandemic, and then 2021, 289. So there's a huge increase in revenue from 164 to 289 from 2015 to 2022. 2021. Now let's check out their dividend history. So check out this dividend growth. Let's start in 2015, 18 cents. It looks like a special dividend. And the end of December 2015, 28 cents, so 18 cents. Then another special dividend in June, 28 cents, so 18 cents to 19 cents in 2016. Then 28 cents, you look like you get a special dividend in December in 2016 at 28 cents, 19 cents. Then another special dividend in June at 28 cents, and then 19 cents still at 19 cents. And you get that special dividend, 28 cents. And then it cracked 20 cents in 2018. And of course, that special dividend in December at 28 cents. So you're getting a dividend. And then 2019, you get 25 cents with the special dividend. Then it cracked 21 cents in 2019. And then in December, you get 24 cents with a special dividend. And it's still 21 cents right there. So we have a nice hike from 2020, 2021. You get a special little dividend in 2021 at the end of December. And then it cracked 22 cents in 2022. Then it hit, looks like you get a special dividend of 8 cents. And then June of 2022, a special dividend at 8 cents. And then you get a special dividend at 10 cents in September of 2022. You're at 22 cents and you crack 23 cents. So there is a little bit of a slow dividend growth in 5 years at 2.55%, a payout ratio of 84%. But there's 10 dividend increases in the last 5 years. Of course, that is not accurate because, you get that special dividend there. But you can, say it's a special dividend. Let's just go with the consistency of, raising a cent just about close to every year. So if you bought one share, you made $270 with a 6.70% dividend yield. So I like dividend growth. Okay, you buy a business development company. Sure, it's a little bit more expensive, but you're getting dividend hikes. And excuse me, I want to raise. If I'm going to be with somebody, a partner, I want growth in this person. I don't want them to just sit there and be like a sorority girl that just parties all the time and still lives in her sorority life. Because I can tell you, I went out on a date with one girl that was a sorority girl a long time ago, and she still lives that lifestyle. And I wouldn't want to inherit $90,000 in debt from her partying and retaking a lot of classes. So I got that out of her pretty quick. And believe me, I ran like a bat out of hell. So that's my comparison between PSEC and another stock. You would rather want to be with a company or work for a company that gives you raises over time. It might be a little slow, 2.55%, but price per share, I want growth. I don't want a decline in my revenue. So that's just my comparison. You can say, oh, well, I got a lot of shares. I make a lot of money. Well, look at how much you would make if you had enough shares in Main Street Capital. So sometimes, a cheap price and a high yield is not always worth it. In Prospect Capital, I won't touch these guys with a 10-foot pole. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. I will have a video for you guys tomorrow. Let me know what you think of Prospect Capital. You guys take care and have a good one.